All right, let's talk about building wealth. And today, we're going to dig into a really simple but powerful strategy. One that feels a lot more like gardening than it does staring at complex stock charts.
So, just think about this for a second. What if, instead of stressing out over every little dip and spike in the market, what if investing could feel more like, planting a garden? Just calmly putting seeds in the ground and waiting for them to grow.
Well, that's pretty much the whole idea behind this thing called the coffee garden strategy. It was made popular by a Taiwanese investor named Shi Ying, and the concept is just so simple. You stop thinking about stocks as just, tickers on a screen. Instead, you see them as coffee trees that you're planting in your own personal garden. And the dividends? Well, those are your coffee beans, a nice, steady crop you get to harvest year in and out.
Okay, section 1, finding a fair price. It's all about the simple math of a good harvest. Any good gardener knows you can't just plant whenever you want. Timing is key. And for us investors, that means buying at the right price. The great thing about this strategy is it gives us a couple of super simple rules to figure out what a good value actually looks like.
So the most important number we've got to talk about is the dividend yield. Just think of it as your harvest rate. It's basically a percentage that tells you how many coffee beans, your dividends, you're going to get each year based on the price you paid for the tree. It's pretty straightforward. The higher the yield, the bigger your harvest.
So, how do you actually figure out if it's a good price? Well, the strategy gives us these two dead simple formulas. First, for a reasonable price, you just take the annual dividend and multiply it by 20. That gets you a target of a 5% yield. But here's the real sweet spot. For a bargain price, you multiply the dividend by 16. That targets a really nice 6.25% yield. See? Super simple math.
All right, next up, the discipline of waiting. This is a lesson from the Taiwanese market. Because, look, the math part, that's the easy bit. The really hard part is having the patience to wait. Knowing when not to plant is just as crucial as knowing when you should. So let's take a look at a real-world example from Taiwan in early 2026 to see exactly what I mean.
Okay, so check this out. When we actually apply our simple formulas to some really popular Taiwanese companies, something pretty interesting happens. You look at Uni-President, Fubon Financial, eSun Financial. These are solid, high-quality companies. But every single one of them is currently trading way above even their reasonable price. So according to our simple rules, they're just too expensive to buy right now. Not a single one is on sale.
So, what do? The market's hot, none of the trees are on sale. What does a patient gardener do? Simple. You wait. You absolutely do not chase those high prices. You just tend to the garden you've already planted, and you keep your cash ready for what they call a fire sale, a market dip that suddenly makes everything a bargain again.
Okay, section 3, searching the global garden. We're looking for where to find opportunities now. Because waiting doesn't mean you just sit on your hands and do nothing. If your local market is looking a little pricey, it's time to look around the world. These principles work everywhere, so let's see what we can find.
And, two of the best gardens for this kind of thing are the US and Australia. The US market, it's famous for its dividend kings. I'm talking about these incredibly stable companies that have raised their dividends for more than 50 years in a row. Then you've got Australia, which is known for its high-yield giants, especially in things like energy and utilities.
So let's look at today's bargain trees. We've got 2 case studies for 2026. Yeah, we actually did some digging around the global garden, and we found 2 international trees that, as of right now, actually meet that super strict bargain price rule.
First up, case study number 1, Altria Group, ticker MO. This is a classic U.S. dividend king. They're in the consumer staples space, and they have an absolutely phenomenal track record of just rewarding their shareholders year after year after year.
And get this, just look at that yield, around 7.35%. That is way above our 6.25% target for what we call a bargain. That is a fantastic harvest rate for your investment.
But okay, the yield is great, but is the tree actually healthy? Well, let's see. It's a consumer staples company. It's increased its dividend for over 56 years straight. Wow. Earnings growth is looking solid, and the payout ratio is sustainable at around 78%. The verdict? Yeah. This is a healthy, super consistent tree.
All right, for our second case study, let's head down under to Australia and look at APA Group. Now, what these guys do is own essential gas pipeline infrastructure. The best way to think about it is like a toll booth for energy. It's a really stable business that just cranks out predictable cash no matter what the economy is doing.
And would you look at that yield? It's clocking in at around 6.35%. Now that just squeaks over our 6.25% line to be considered a bargain. This is exactly the kind of thing you're looking for when you're searching the global garden.
So let's check its health. It's in the energy and utilities sector. It's got 20 straight years of dividend increases. Future earnings growth looks really strong, and it has solid cash flow to cover those dividends, no problem. The verdict? Yeah, the source material calls this a hardy coffee tree, and that feels just about right.
So this is where it all clicks into place. Look at this. Our formula says Altria is a bargain anywhere under about 68 bucks, and it's trading at 58. And APA Group is a bargain under $9.28, and it's trading just below that. So what does that mean? It means that according to our simple coffee garden strategy, both of these trees are officially on sale right now.
Okay, final section, your investing philosophy or the gardener's mindset. Because at the end of the day, this isn't just about a couple of formulas. It's really about a whole new mindset, a new way of thinking that can totally change how you feel about investing. It's all about shifting your focus away from the day-to-day anxiety of the market and towards a quiet satisfaction of just tending your garden and watching it grow.
And this quote from Sheshe Ying, the guy who popularized this whole thing, just says it all. As long as the coffee beans keep growing every year, I will keep holding. See, the goal isn't to flip the tree for a quick buck. The goal is to hold on and just enjoy that steady, growing harvest of coffee beans, those dividends that it gives you year after year.
So, I guess the question to leave you with is, what kind of trees are you looking for in your garden? Are you chasing after those super fast-growing saplings that might just die in the first frost? Or are you looking to plant some hardy, reliable trees for your own coffee garden? Think about it. What does your perfect harvest look like?